20 to 1. They're all fairly small profit targets. So to make this stuff of trade and pay, we need to constantly win. Who out of the group here trades this way or has traded this way? And what are the drawbacks to trading this way? You just sort of type in Skype, just top of your head. What are the shortcomings of this sort of approach to trading? Too big stops, yeah, CD. So in effect, the amount of profit you're making is not enough to cover your stops. You need to win too often. Yeah? RAF break-evens, do you mean by that with moving your stop up to break-even early and then stop down? Anyone else? Hold on, my Skype is not. Saw gained an impressive risk to reward. Yeah, because there's the constant pressure to win. When you have a good day, you enter at A, your stop is at B, and you take profit at C. When you get those, it's a must win. Yeah, exactly, Eric. Game. When you trade this way, it's a linear profit curve. If you have 10 days winning on the trot, you're going to be winning each day about the same amount. So even when the market is in your favour, and you get those sort of periods, where, say, there's some fundamental news, and then price just goes in the same direction all week, hard, all week, short. When you trade this way, most of the time, you're sitting out of that market move because you've already hit your profit target, you've taken your profit, and you're out. So the market is never with you, and the trend really can't be your friend because you're never capitalising on trends when they happen. So the alternative to that is low trading. If you look at this chart. So this was British pound, Japanese yen, not last week, the week before, where we had a nice trend. Now, if we traded with the traditional one in, one out strategy, there we had plenty of opportunities to make wins each day last week. They would have been small wins, and we would have just been having that linear profit curve, whereas with flow, after we've taken an entry, we never look to exit. Our next move is always to add to that entry, okay? And if that survives, then we look to add again, and we look to add again. So last week, we would have this run of, on each day, the low of the day survived. And then by the end of the week, this 100 pip move, because we have a stack of 5 entries open already, with the extra entry here would be worth 600 pips. So with flow, then you get an exponential profit curve, not a linear one. Now, obviously, for that to happen, you need to have a sustained move in one direction. I can see that happens on the chart all the time, but you have to question why nobody is trading that way. What do you think? Why do you think that nobody trades this way with a buy and a hold strategy? Fear. Instant price. Scared of losses. Okay, can you see that the mechanics of the market, the way the market moves, means that those fears are unfounded, because you'd have much wins, and then those losses wouldn't matter as much. Yeah. Here, which slides? Okay, so it's partly transfers and big banks have to use it. Yeah, I mean, so part of it is fear and not being 100% sure that these positions are going to survive if you do hold them, and then the other part is just a change of mindset. Okay, so if we're going to use this buy and hold strategy, we need to enter in the locations where the entries are going to survive, obviously, and then we also need to be sure that these entries will make stacks of positions and series of these positions will survive. And then we also need to be sure that the profit from these positions is going to be much greater than the costs to establish them. So how are we going to go about that? So using the M15 time frame for flow, what we're actually doing is we're actually trading the daily time frame, but we're just going to use the M15 to find low-cost locations where those entries can survive. So if we look at this is a recent gold chart, daily time frame. If we look at the extremes of the daily bars, okay, we can see that it's the extremes of, we see it's the extremes of the daily bars that are going to survive the retraces. If you look at this chart here, you can see that if we sell at the high of the day and buy at the low of the day, these runs of surviving are much more common than we would believe. Okay, so here we can see 1, 2, 3, 4, 6 surviving positions. 1, 2, 3, 1, 2, 3, 4, 5, 6. 1, 2, 3. 1, 2, 3, 4. 1, 2, 3, 4, 5, 6, 7, and so on. So essentially, we just need to find the extremes of the daily time frames and then hold them, and eventually these series of surviving positions will happen. Did everyone get that so far? I mean, I don't think I explained that particularly well, but that's clear. Okay. Yeah, so essentially the high and the low of the day are positions most side. And those positions build into stacks of entries much more often than we would believe. So how do we use the M15 to find the high and low of the day? Because obviously we don't know where the high and the low of the day is going to be. So we have to wait for that. Okay, malfunction there. Okay, still got back screen. I'll tell you what I'm going to do. I'm going to switch to my charts because slightly easier for me. Okay. So here's GJ at 15. Okay, here's the start of the day. Now we're looking for the low of the day to take a long position and hold it, and we're looking for high of the day to take a short position and hold it. So all we're going to do is we're going to look for a new extreme to be made. You see at the start of the day here, we made this high of the day. This is the current high of the day. And then we're going to look for price to close down and then give us an entry on the next bar. So right at the start of this day, this was a possible high of the day when we had a short. Then we do exactly the same with a short, with our longs. We look for a low of the day to be made, a bar to close up, and then we look to enter with momentum on the very next bar. This short survives, and this one here gets taken out, and then we have a new low for the day. Price closes up, but there's no entry on this one. Then we get a new low for the day. Price closes up, but no entry, and then a new low for the day, and then we get an entry here. Okay. This survives for a bit, and then that one gets taken out. We have a new low for the day, and this is our entry here. So those two survive the day now. We've got our low, we've got our high. Then we just we leave those positions. These have been our costs for establishing that position. There's two entries here. And then we move on to the next day and we do exactly the same again. So we have our this okay, so we have one position long surviving here. The next day starts. This is our low of the day. Price closes up. We enter on the very next bar with momentum. Now we have two positions long. This position survives all day. Okay. We do the same with highs. When a new high is made, price closes down. We enter on the next bar with momentum, and then we hold that until it gets taken out. And so on. So at the end of this day, these have been our costs of establishing position. Okay, now we have two positions long. And we go on to the next day and we repeat again until we find the low of the day. Eventually what we end up with is entries at these positions when price moves in one direction. Does everyone get that so far? Tony's asking about the stocks. So the stocks are always, remember, we're looking to find a location where the price is not going to come back to and these positions are going to survive. Okay, because it's the positions that survive that pay all of the costs when we come to take profit. So we've located these the low points of the day as the points that are rarely revisited. So obviously our stock going below the low of the day is the safe place for it to be. If you find the low of the day, then that stock's not going to get taken out, obviously. Any other questions on the entry? Okay. One drawback to this is, obviously, you need to sit and watch the charts 24 hours a day, waiting for a new high. March, where you also taking shorts. Yeah, it's really important that there's no bias in this. Let me go back to the daily time frame and I'll try and explain it a bit better this time. Last week's a good example because this week before, okay, we can see it's a clear one-way trend. Okay, so obviously, yeah, you're going to make massive profits in that. I mean, let me just give you an example. If you've held all your positions, 120, 200, 210, 280, 210, 420, 540, 600. So, you know, when price trends like that and you get a stack of 5, 6, 7 entries, then the profits are massive. That pays for all of the shorts and all of your costs, the false bottoms and false tops, easily covered when the price breaks away and moves like that. But you can't have a bias. You're looking for the high of the day, you're looking for the low of the day. And every time that new extreme is made and price turns around, then you need to take the entry. Because if we look at last week of GJ, okay, so this is just Monday here. Okay, so you would have had a long here and a short here. So the next day, your short got taken out, and you'd have a long here and a short here. Okay, next day, these two get taken out, and now you've got two shorts and a long here. Then the next day, this one dies, and you've got three shorts and a long here. And then at the end of the week, these two die. So you've ended up with two longs and two shorts. Okay. So this week this has been costs involved. Okay. But you haven't got a bias where you would just have, if you just had longs surviving and the price went short next week, then that's the new loss of lot. Whichever way the market now decides to move, if it decides to move long, then we'll have lows surviving, and that's where our profit will come from. Okay, because we don't go in with any bias. We're just playing the extreme. Short here, long here, short here, long here, short here, long here, short here, and then price breaks down, and this is our profit here. Paying for all of these longs and any other costs we incur. Magnus, no more than one entry per day. I mentioned that. Not too some, too consistent. Okay, Magnus, you can enter within a day. If we are to I'm moving on a little bit into the kind of a bit more advanced, really, when you've totally got rid of this. Okay, here's a good example. Strong trend today. So let's say that let's say we got this high today here. Okay, price closed down. Next bar, momentum, entry into the trade. Okay, we have the high today now. Okay, we tried along here, failed. We tried along here, it failed. We tried along here. When this closes down here, we can see clearly this is trending down. You can add an intraday flow trade here and TP this one down at the bottom, paying for all of these costs, and leave this high of the day, the one most likely to survive the retracing, to hopefully the medium and the long-term profits. At the same time, when you have a daily trade.
What's the release button do? The release button do? This release button.
Oh, it takes the electronic stuff out of it.
It's what?
It's got all that electronic stuff. So you can hook it up to the amplifiers.
Yeah. It's like a little bit hard with the electric charge.
I've got that mic on. Someone...
Did you make it?
I'm going to chat with their stuff. Mute your mic.
Here we go.
Okay, I'm going to try and carry on anyway. So, say, when we have this daily trend, we have this position surviving here, we can bet on these inner ones and promote this to be.
That now goes to both computers?
One over there, one over there.
Oh, that is cool.
It's one's computer, two screens.
Because now that I'm trying to talk to her, something about the audience. This is what I keep trying to do. Is what I keep taking them out, and I keep taking it. It's like on that computer. I'm like, oh wait, it can't go through.
Yeah. Can someone, whoever's chatting left side, keep me on the
It's really cool. Do you ever use the laptop keyboard?
No, I just use this keyboard. I'm scanning. I have problems with scanning.
Mike,
You guys should get that cool over here.
it's not tang, is it, obviously?
Why do you guys get rid of it? Where is it at?
I need to shut this down.
Huh?
Shut this down. Something's wrong.
Three. The NSA. I think that was Mike. Or is Mike still here? Mike in the States. So yeah, so getting back to Magnus's question, yeah, you can add inside, once you have the low of the day or the high of the day secured, you can do intraday trades within that and then take those profits intraday and leave the extremes to roll over or the days to stand up. And you do the same to move up to weekly and then up to monthly. If you look at this daily chart on GJ, then these days are also the low and the high of the month as well. So you can take profit on all of these and leave this one to try and make a monthly stack as well for much longer term profits. But that's kind of moving on. You don't need to do that. I mean, you can just trade this all the week. So any more questions or queries about that? Does anyone still have doubts that you're going to get a series of surviving positions? Okay. Teddy, I will go into this for entries because okay, Tony, so what you're looking for is you're looking for a new extreme of the day to make. Okay? So this was the current low of the day. So we're not looking to take any longs until we make a new low for the day because we're looking for the low of the day. So we need it to actually make a new extreme first on M15. Once that happens, then we look for the price to change direction and close in the opposite direction. And then we, just the same as all of my strategies before, we're looking for the very next bar to trigger the entry. Okay? And our stop goes under the low of the day. Then we do exactly the same for the high of the day until we get a high and a low that survives. Do new extremes have to be closes? No, they don't. It can spike to a new extreme, okay, but then you're going to need the next bar to close in that direction change anyway. So no, just a spike. You're looking for it to make a new high, basically. I mean, a lot of this is actually kind of along the lines of supply and demand, because what we generally say is that if price is going higher, if it's going lower, then it needs to find more supply for it to change direction. So we're kind of looking to enter when price hits new supply access to the day. Will this work as well for weekly? Yeah, it's not time frame specific at all. You can use H1 to find the high and the low of the day. You can find weekly H4 to find the high and the low of the week. The whole point is to make you enter from extremes. Take entries where your positions are much more likely to survive, and then you can stack your positions. And when you stack your positions, that's when you get into the exponential profit curves, and you can make large amounts of profits in short period of time. And then that takes the pressure from worrying about your entries and whether they win or lose. And there's one really important bit that I was going to mention, and I went to answer Magnus's question and I never went back to it. And that is that this is great, yeah, this all works, but you need to watch the charts 24 hours a day. So what can you do about that? Well, what I do is I just goes down in Asia. So I just ignore the highs and the lows during Asia. And then I start from, say, Frankfurt open at 6 a.m. and then at 11 p.m. I stop looking. So sometimes your extremes might be the second day or second half. If you get over your chart and do a lot of testing, it doesn't really make a massive amount of difference other than the fact that you actually have some time to sleep. Obviously, the Aussie pairs and the yen pairs are much more likely to make their extremes during Asia, but even with them, you'll find that it's often in the busiest sessions, London and New York, when they're made. If the new daily candle doesn't touch the previous low, entry position. No, well, you don't. What happened the day before bears no relevance on the day. You're looking to cheaply find the low and the high of each day, and then to let those entries run. Generally, the low and the high of the day will not always be inside the previous day's high and low. Generally, will make a new high or will make a new low, more often than not. Sam, you have an indicator for alarm to lower data point. Okay, brilliant, got to that. TD has made an indicator that works really well for this. If you want to discuss whether you can have it or not, then contact him. And we've both been using it, and it's really good. You don't have to sit and watch your charts. You'll be surprised at how few highs and lows of the day there are in a regular day. Generally, price will spike out to a high and spend the rest of the day inside that range. You'd think that you're like constantly getting a new high and constantly getting a new low, but really that's not the case. If the yen pair move to raise, that's 100 pips on the way. Yeah, if you miss the entry for the day, you miss the entry for the day. Really, that's just how it is sometimes. So there were a few my charts, or you're going to get instances like this last week where, like here, okay, this is on Friday, so this was our low of the day, okay, price player stuff. We entered there, so we're holding along from here. And then we get this massive spike there, makes a new low for the day, and then you've got like a 200 pip entry. Well, the whole point is to find low-cost entries to stack. So there's going to be occasions when it's a valid entry, but it just doesn't fit that what you're trying to achieve. What we're trying to achieve, we're trying to get a cheap stack of entries that go for 200 or 300 pips in the same direction, and then we can take, say, 700 pips profit, leave a little bit running, pay for our costs, and sort of continue on calmly taking our entries. So, there's going to be anomalies like that, and there's going to be occasions where, like here at the start, this is a lovely high of the day, in fact a high of the week, and it happened in Asia, and you might have missed it. You might have there come online at 7 a.m. here, and seen that and said, well, I'm going to take a lower high, lower low, I'm going to take a 20 pip risk on this one. Or you might just say, well, I've missed it, the trend's been up, I'll wait for the next entry. So, I see with a lot of trading strategies, I think people seem to think that the market sort of somehow got like a structure that if you just get the combination right, then you're always going to be on the right side. Whereas really it's just a chaotic up and down movement. And whatever your approach is, there's always going to be anomalies and nuances where it just doesn't work out for you. In those occasions, you sometimes just have to say, okay, I can see a tree, I'll wait till tomorrow. Do you prefer M15 for this method? The good thing about this method is you can make a stack through the week, maybe 3 days or 4 days, that pays a lot of profit. So if you are slightly impatient and you can't wait 3 weeks with, say, H4 to build up a nice stack of profit, then it might suit you more. The downside is that you are going to have lots of days where you go lose, 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 and do 4 loses on the trot. So you are still going to need to break that mindset of winning every day. You have to break that mindset that's the way. I think the easiest way to do it is to go to your daily time frame and just look at the highs and lows and look how often these stacks are going to occur if you just take the extremes and hold them. Then look at how much the profit is on these stacks. See how much the profit stacks up if you hold these extremes. And then go back and see what an average cost is for the day. And I think you'll realise that the reward doing this, of holding positions and letting them stack up, really will pay dividends. Where wants to know if you use a trailing stop. I try to avoid it. It is really tempting sometimes, especially when you're like 100 pips up and it's come all the way back, and the thought of losing 100 pips and then the 20 pips you risked is really painful. But let me just sort of zoom in here and give you a little just a little example of why I don't like to leave the stops up. Okay, let's say you took this entry short at the high here. So with an M15 closing down, it's probably like that. You stop over the high. Okay, and then if you move to break even here, the next day this high would take you out. Okay, so you saved yourself 20 pips there by doing that. But then if you look 1, 2, 3 days later, that entry at the high is now worth 140 pips. So that's 7 times what you saved. And this isn't even trending. This is just a little consolidation period at the top. So when you've secured these extremes, they're really powerful because, and even even like 1 day later, we're down 100, we're up 100 pips on that entry. Okay, the same on this one, 200. There's 300 pips there where prices are sideways, essentially. So, I'm not massively keen on it. Maybe if this is the scenario, you've got this low here, and this low, and this low, and this low, and you've got this really weak bar now, perhaps move the stops from this one up here and this one up here. But certainly don't, you'll find there's so many of these occasions where you would have gone long here, and the next day it came down. If you'd have moved your stopper, this would have tapped you out, and you missed out on that run there to save an M15. And the whole point of this is we use an M15. The cost to find these extremes is really, really low compared to the moves that you're going to get into. Okay, Magnus, how do you decide when to take profits? You can come up with your own, I mean, I kind of looked at this and I thought, well, what's the one rule that's always going to work and really good? When you've made 100k to win. That's brilliant. I really like exit rules like that. If you're 1,000 pips up, take some profit. But that's sort of that's way too open-ended for most people, and they really dislike it. But I mean, something that I was interested in at first was this idea where you bought this low, you bought this low, you bought this low. These days continue to close up. You bought this low. That's a Sunday candle there. And then this day closes down. You still bought this low here. So now, on this next day, look to diversify because we've had a day close down. So I could say, right, well, I'm going to look for the high of the next day, and I'm going to close this one, close this one, close this one, and leave this one open. Okay. That works kind of well. And then you would have been short here, short here, short, short. This day closes up. So I'm going to look to diversify when I find the low of this day, and I'll close this one, this one, this one, and this one, and leave this one open. That works really well. You know, you are going to have like days where you bought this low, this low, this low, bosh that takes that one out and all of that one. But you know, again, that's just a cut. You still only lost an M15, and that one's about to go as well. Pros and cons, whatever.
I don't know, Shitty.
Pros and cons, whatever. That was random. Whatever you decide to use. You're all good technical traders. I mean, there's no reason why you can't, like in this run up here, we can just take the next weekly S&R. Drop some lines on the next weekly S&R. Go back to it and say, right, well, I'm going to start to look for profit when we hit those. So really, again, it's like the chaos thing that there isn't one right or wrong answer. But the one thing you need to avoid is making profits too early, because that will just destroy it. And to get in that mindset, I suggest you go back and do, like I was saying with the Davies thing, count the springs of highs and lows that survive, and see what the average is. If you're like 3 or 4 positions surviving, then you're probably around the average, and you can perhaps diversify some of your positions. Maybe you're the sort of person who thinks, you know what, I'm going to just hold everything for a really long 20 position, 10,000 pip stack. Obviously, there's going to be more drawdown the longer you hold your positions between taking profit. So I think a little bit of flexibility, finding what suits you, is the only really good answer to that one. So, any more questions? Anything else I'd go over again? Someone did ask about the MA, it's 50 SMA. It's not important, I'm just used to having it on the chart. some pretty good trends. Two accounts, one normal, short broker. Yeah, all of the flow trading needs a broker that will allow you to hedge. And I don't know. I think that's a problem in Europe, though, Magnus. Is it? I think that's more of a American thing where you're not allowed to open a new position without closing the old one first. The more I look into this idea of position trading, the more I wonder about the motives of the brokers making people do that. Because I've always thought of position trading really as being something that's on a time frames, needs a much larger account, it is over a much longer period of time. And the more I kind of look into it, seems like knowing what we know about how markets move, if we look, and if I zoom out on this daily chart on GU, price does make these big sustained moves in one direction. Why we all adopted this technique of entering the market and straight away exiting the market really is kind of counterintuitive of what we should be doing. Obviously, the fear issue is the biggest reason we all kind of gravitate towards that. But you need to, I wonder why really all the technical ideas are based on that as well. It's very hard to find much information where people are stacking positions rather than entering and exiting the market. If you're worried about your position size as well, you can reduce your position size to trade this way. So say you normally trade with a standard lot. Go with a third of standard lot. Completely remove the fear of entry out of it and allow yourself to take the trades and just forget them, because it's all in the power of how many positions you end up stacked with. And you can actually risk a lot less doing this, because your combined risk to reward is way higher than anything that we were doing before. This should be a weekly thing. Yes, I've got to do it weekly, Dave, because I need to get much better at this. So maybe next week we could do another one for people that have actually tried this week, and we can sort of go over observations and nuances and what worked and what didn't. Yeah, definitely, Sam. I mean, I'm really. Sorry, I think there's a time limit on Flowinar. People can go back. Okay. Raj asked me how I've been trading this way and what have my results been like. Are you talking specifically about using the M15 to find the high and the low of the day, or stacking positions? Because I've been kind of playing around with the position. I've been playing around with the position trading and stacking positions since New Year, really. And I've tried on H1 and H4. And the M15 idea really came back because Jeremy, who is the our group, wanted to find. There's a thread on Forex Factory called the millipede, equity millipede, and he was using the M15 to enter, and he was saying that he was getting a 30% win rate, and Jeremy was like he didn't really elaborate on how he was trading, and Jeremy was really interested in that, so I had a look at doing it with M15. And obviously the problem with M15 is you get way more entries that are going to be taken out by the retrace on the daily time frame. So we had to think of a way of finding entries where you didn't have lots of losses every day and you still found it extreme, hence looking for the high and the low today. I've only done it for 2 weeks with M15 on GJ last week and GJ the week before. This is this week's GJ. I didn't do particularly well. Monday I was dying of flu, so unfortunately I didn't get the high of the week. Obviously, the week before, I don't need to explain how well it went. I mean, it went straight up all week. You couldn't lose. But those streaks are really common. If you start looking, although the trends, they look very snaky, like they're going up. As soon as you start focusing on the highs and the lows, you realise that these positions make these strings of survivors really common. Sorry if I've already covered this, but you all did, yeah, everyone did well on GJ last week. And this is the point, is that the market is going to do what the market's going to do each week. It's either going to trend really nicely or it's going to chop about and go nowhere. Okay? No matter which way you trade, however bloody clever you think your entry system is, when the market goes nowhere, you can struggle to make much profit. Okay? The important thing is how much profit do you make when the market goes in one direction. If you're still like doing your that's my setup, I'll take my entry, 3 to 1, 60 pips, I'll X. If you do that, no matter what the market, how great the market was that week, your profit is limited. But if you've got an approach where you hold and stack your positions, when the market really moves, then you make big profits. You need to have a strategy that enables you to do that. And if your strategy doesn't, if it's take profit at the next support and resistance, or take profit when it's at 3 to 1, you're never going to do it unless, like, you're some sort of wonder kid and you just, hit winner after winner after winner. And there was a really, really good quote in a webinar that I watched by a hedge fund guy, and basically he said that we all overestimate how good we are. We all think we're like a special trader that's going to suss it out and do really well. And he said that they interviewed Harvard graduates, and 70% of them thought that they were in the top 5%. It's exactly the same with trading. We all think we're bloody good. Well, no, we're not. Most of us are crap. So we need we need something that when the market goes our way, we're going to make big profits. And I think this approach is much more likely to give it to you than that traditional one entry, one exit approach. Sam, I'm not using the 50x mode for direction because I'm not going into each day with a bias. I'm going to sell the high of the day and I buy the low of the day, and there's going to be no discretion involved. Obviously, like I was saying before, if the high of the day entry is like a 200 pip and 15 bar, then I might skip it. Okay. Other than that, I don't go with any bias. If perhaps for the whole month, what market I'm looking to trade is completely flat, I might just say, well, this is ridiculous. This is, GJ is not going to go anywhere. It's just common sense to pick something else. Other than that, there's no bias at all. What filter would you think would pick in pairs for real or just I think you can trade one pair. Two maximum. That's just going to keep you busy enough. And if you do, like I said, we're up the daily chart, look at the stats that happen, look at the profits available, you'll realise that you don't need like a lot of instruments to make big profits. So I would say pick the obvious, pick something that's obviously strong and something that's obviously weak. The yen at the moment since November has been weak. Nothing's changed on that. So pick a yen cross. Even the pound, dollar, pretty good, pretty solid trades. I don't think you need to go into massive detail. I could be wrong on that though. If you might say, I'm really good at weekly analysis. This week looks definite to be an up week, so I'm going to use this technique. I'm just going to buy the lows of each day and stack those up. You might be wrong on your cost, but your costs will be less because you won't be losing on the highs. That's another way to approach it. The most important part of all of this is not to enter then exit. Enter and then enter again if your previous position survives. That's the key element of all of this. How you decide to enter, I've just given you my suggestion today that I kind of like. I think it's quite eloquent. But really, that is the key. The key thing is to get that exponential profit by stacking positions. Okay. Mike, I have looked at how about we just trade this and take profit on all the swings, because if we go into GU last week on F15, okay, like on this day here, price spiked up, closed down, price spiked up, made a new high of the day, closed down, entered with momentum, dropped 100 pips. Oh, God. Not fluent in price made this high here, closed down, entered with momentum, here's a short here, and then price dropped down 100 pips. Then it made a lower of the day, okay, closed up, entry there. Why not just take profit with this one, and then this one spikes up, and take profit with that one. Now we have like a double top, and do the same again. And that's great, that works some of the time, but you're still stuck into on a short sample period, i.e. just looking at that day or a number of days, that will seem to work really well. But what people always do with trading is they always look at too small a sample rate. You look at all of those strategies on base Forex Factory, where they say, oh, I've got a 70% win rate. They probably looked at 100 or 200 trades. Whereas in their trading career, they're going to do 200,000 trades. And I bet you ask that entry-exit system they're using, the win rate is only 50% over a real sample. And that's the problem, is people always look at too small a sample. So on this instance, entering and exiting works really well. But you just look at GU last week and GJ last week, where it went in one direction, and you made 2,500 pips by holding, then this extra 100 or 200 pips you made this day are no longer significant. Does that make sense? It's all about the big sample. Again, going back to that daily thing, look at how often price makes those strings of daily highs surviving, strings of daily lows surviving, and then get out your tool and see roughly how many pips the win would be if you'd held for 4 or 5 days or 7 or 8 days. And that will put it into a little bit of perspective of the different scale of profits. So yeah, you can add intraday when prices trending. There's no reason why you can't do that. Again, you're just risking an N15 entry. If you get a lovely lower low, lower high, and price closes down, by all means, take some intraday profits as well. That's probably initially going to make you feel quite good because you'll pay for those losses. When you start out doing this, you may say over the first 4 days have 2 shorts surviving, and you might be 200 pips down. No matter who you are, that's quite difficult to deal with psychologically. And when you get to that point, again, I say go back to the daily time frame, look how much the profit is when you get the surviving stream of a set of entries, and that will help to reassure you. But by all means, yeah, you can do intraday entries as long as you're not losing sight of the big picture. DS is obviously making a point about how long we're going to be spending the chart. You'll be surprised actually, Dave, that if TV's willing to share his mate's indicator, oh, there you go, then, last week once I was doing that, I just, I put his indicator on, I put it to start at 6 p.m. and stop at 11 p.m. And, I maybe got 3 or 4 signals within that time to trade. And then the rest of the time I'm free to go to sleep. And the days I was feeling well, I got the extremes, and it was not really much more intense than trading H1 or anything else. And the instruments, this is a personal thing. I think dealing with like a few instruments or like a group of instruments is very easy, but the only bit you're going to have trouble with is the psychological bit, because you do get loser, 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 loser. You're going to need to deal with that. If you've got 4 pairs, that might be 12 losers in a morning on the trot, or in a session on the trot. as long as you've got your expectation right and you're prepared to stick at this, at least for a week, really minimum 2 weeks, then that shouldn't be a problem. I still think you can pick 1 or 2 pairs maximum that are currently trending quite well. There's more than enough profit there. Again, go back to the daily, have a look at some weeks, see what profit was available if you took the entries and held them. Cool. I think that's pretty much it, really. I don't think the beginning was particularly good, but I think as we've sort of had a flow of questions, I think I've got the whole core across, and I'm really up for doing some more next week. So perhaps if anyone trades this or even a variation of this next week, then perhaps drop me a line and we can get together and do another webinar next week to go over our findings. Cool. Thanks, Ryan. Cool, Ryan. Cheers, Magnus. Thanks, Tony. And if anyone finds out who the guy was with the with the microphone that was having his family time during the webinar, then let know that he was really helpful. Okay, thanks everyone, and let's do this next week. Cheers, bye.